Alibaba's fiscal fourth quarter results are out and shares are up about 3% in pre-market trading. In this video, we're going to use our Alibaba earnings model, the details from this quarter, and the comments made by management to see if this price move makes sense. So for Alibaba, it's a little bit different than some of the other companies that we cover because management doesn't actually give us any guidance. So we're going to go through the growth rates that we had in our model yesterday prior to today's release and just demonstrate how we changed some of those growth rates to get to our earnings projection for the full year 2017. If you haven't been listening to the earnings call this morning, management at Alibaba pretty much rehashed some of the comments that they made on last quarter's call about the macroeconomic conditions. So you can either re-listen to the webcast from today, or you can listen to our description of some of the key points in our preview. But there's no point in us rehashing those again on this call. So instead, we're just going to get right into our earnings model and go through the changes that we made for 2017. So we'll start this analysis with a breakdown of the China retail business, since that's really what's driving overall earnings for Alibaba. So for total GMV for the China retail space, it came in at 742 billion. We had expected 790 billion. So our estimates of total potential activity was a little bit too high. On the other side of the coin, the monetization rate was much better than our expectations. So we had expected 2.3% monetization rate, and it actually came in at 2.5%. So let's go through a breakdown on both the mobile and PC basis so you can see how we changed our growth rates for each of those metrics. So first of all, if we take a look at mobile, we had expected 586 GMV for mobile, and it came in at 541. So that was really where all of the shortfall was. PC came in at 201, and we had expected 203. So we didn't make any changes to our growth rates for GMV for the future periods of PC. But this rate, we had expected a decline of 10% from the last quarter, and it came in at 17%. So we brought all of these rates down. So prior to this release, we were expecting the June rate to increase about 20%. We were expecting this to increase 8%. And then for the December quarter, we had expected about a 41% increase. So we brought that down to 38%. And then for the March quarter of next year, we had expected a decline of 15%, so we brought that down a bit to a decline of 17%. So that's how we incorporated the lower GMV from the March quarter into our future 2017 forecast. Now for the mobile monetization rate, it came in at 2.4%, and we had expected 2.2%, so much stronger in mobile than we had originally anticipated. Again, on the PC side, we had expected 2.6%, and it came in at 2.6%, so we didn't make any changes to the desktop monetization rates. But for mobile, we brought the June quarter up from our estimate of 2.3 to 2.4. We brought this up from 2.4 to 2.5, this from 2.9 to 3.0. And the March quarter from 2.2 to 2.3. So we increased it by 10 basis points each quarter. And keep in mind that this increase, the mobile increased about 20 basis points, so that might even be a little bit conservative. Next, we'll scroll down to the other segment section and take a look at the growth rates for 2017. So for China wholesale, we had expected 1.1 billion. It came in at 1.1 billion total revenue, but the growth rate was a little bit lower than our expectations, so we brought our growth rates down for 2017, just slightly. International came in at 590. We'd expected 499, so we brought our growth rates up slightly for each one of the quarters in 2017. International wholesale came in at 1.4. We had expected 1.4, but again, the growth rate was a little bit lower than what we had anticipated, so we brought our growth rates for each quarter down just slightly. Cloud computing did a pretty good showing at 1.01 or 1.1 billion. We expected 0.9 billion. So again, we brought our cloud growth rates up for 2017. And then other revenue was much stronger than our expectations. So we had expected 1.2, it came in at 1.7. So we brought our growth rates up for 2017. We left our estimates for all the OPEX items consistent with our estimates prior to this release because they didn't really change by all that much, or didn't vary from our expectations by that much. And we left our non-GAAP adjustments pretty much the same. Most of them are based on averages of the last 2 quarters. And when we did that, we can scroll back up to the EPS section. Keep in mind that we calculate all operations in RMB and then translate it back to USD for valuation purposes, since this is a foreign company listed on a US exchange. So we look at full year 2017 estimates. So prior to today's release, our total USD EPS estimate was $3.39. And now, after making those adjustments based on the growth rates that we saw from the March quarter, our total 2017 EPS has increased to $3.74. So from $3.39 to $3.74, pretty strong increase. And our valuation based on a market multiple based approach only at 23 times the next 12-month consensus estimates on an ex-cash basis moved from $76 to $79. So overall, we'd say that there's so many assumptions that you could change, and there's no guidance from management. So these are our opinions at this point. But based on the trends that we saw in the March quarter, we would say that the price move in the pre-market trading activity does make sense. Be sure to check back after the analysts have updated their models. We'll recalibrate this model to meet the new consensus estimates. If you're interested in financial modeling, subscribe to our YouTube channel, and thanks for watching.